Hello, class. So this is the lecture over the closing process. So this, again, occurs at the end of the month, okay, the very end of the month. So we look back at the accounting cycle, the closing process, it takes place on step number 8. And so basically what we're doing is you got to think of net income or the profit of the business, net income, profit, whatever you want to call it, as like the score of the business. How well is the business doing? How well do they make money? And you start over each month with a score of 0. Okay, so for example, think about a basketball game. Okay, let's say there's a basketball tournament, and the basketball tournament, you have one game, and let's say the team scores 60 points. Okay, can you take those 60 points and roll them over into the next game? No, you can't. Okay, you start over each game with 0 points. And so you start over each month with 0 points of the business. In other words, 0 net income. So what you're going to do is you're going to close out the accounts that have to do with the earnings of the business. You're going to put them into retained earnings, your savings account, and then start over in the next month with a clean slate in your earnings accounts, which are revenue, expenses, and also dividends will be in there too. So this is how this plays out here. So we have assets equals liabilities plus equity. Okay, so our accounting equation. So you have permanent and temporary accounts. The temporary accounts are the earning accounts that are going to get closed out at the end of every single month. Okay, and I highlighted these accounts or made them in red font. Okay, so these are our temporary accounts. Now, again, a lot of businesses have a lot of different revenue accounts, a lot of different expense accounts. All those accounts get closed out at the end of the month. Okay, they call it the closing process. So let's say we're going to close out our revenue, so we have to take it down to a 0 balance. So it has a $15,000 balance in it. So we're going to credit the revenue account, or I'm sorry, debit the revenue account, $15,000. And then, so we have a debit, so we have to have a credit. So it's going to go over to our income summary account. So income summary is an account that shows up at the end of the month. It shows up for the closing process, and then it's going to leave immediately after that. Okay. And so, so that's the reason for the income summary account. So now the expenses have a debit balance of $3,000. So I'm going to credit the expense account to take it down to 0, and then I'm going to debit the income summary account to offset that entry, because every time you have a debit, you have to have a credit for an equal amount. And so, as you can see here, the 15,000 minus the 3,000, that gives us 12 grand. And if you refer back to our financial statements, you can see here that resembles the income statement almost exactly. Okay, so the income summary account is basically the income statement. And the reason it's called the income summary account is because it summarizes the income. Okay, so again, our revenue is 15 grand. Our expenses are 3 grand. We have a net income of $12,000. Now the income summary, I told you it's going to go away at the end of the process. So we have to zero it out as well. And so what we're going to do is we're going to debit here and then credit our retained earnings. And so we're taking basically our earnings and putting them into our savings account, the retained earnings account. And this happens at the end of every single month. Okay, so right there, so we have 12,000 plus 20,000 plus a 12,000. And now our dividends account, we're going to close it out as well. But it does not go to the income summary account. Okay, we're going to credit it here, and then we're going to debit retained earnings. And so now we're going to do our total for retained earnings. And our retained earnings has a balance of 29,700. So if you look back at the financial statements, that actually lines up with our statement of retained earnings over here. So the dividends account, be sure to note, it does not go to the income statement on the financial statements, and does not go to the income summary during the closing process. It goes right to retained earnings, and it goes right to the statement of retained earnings on the financial statements. So This account right here represents the statement of retained earnings, financial statement, and this account right here represents the income statement.